Hey everyone, welcome back to Corporate Decoder, the place where we decode the nitty-gritty of corporate filings. And this time we're diving into some pretty interesting financial revelations that might just make you raise an eyebrow. Today we are dissecting a financial report from Moerus Worldwide Value Fund. And trust me, it's got more twists and turns than a shareholder meeting after a bad earnings call. Let us jump right in and see what Moerus Worldwide Value Fund has been up to. This here is a report filed with the US Securities and Exchange Commission, basically their way of telling the world what's happening under the hood. It serves as a shareholder report, so it is packed with information for anyone who is invested or thinking about investing in their fund. This report is filed on a form called N-CSR, which is for Registered Management Investment Companies. Think of it as a special report card from mutual funds and similar investment vehicles. It gives a detailed look at their financial health and performance. Our main focus is on the Moerus Worldwide Value Fund, which is part of something bigger called Northern Lights Fund Trust IV. It is like a big company with different investment funds under its umbrella, and Moerus Worldwide Value Fund is one of them. The report covers the period up to the 30th of November 2025. This means we are looking at the fund's performance and financial standing for the year that ended on that date. Now, the fund has different classes of shares, and today we're looking closely at Class N, identified by the ticker Moerus. Think of classes like different flavors of the same ice cream, each with its own price and sometimes its own perks or costs. Let's talk about costs because nobody likes paying more than they have to for a hypothetical $10,000 investment in Class N shares. The cost for the past year came out to about $174. That might not sound like a lot, but it represents a 1.50% cost as a percentage of that investment. Over time, these percentages can really add up. Now for the juicy part, how did the fund actually perform? For the year ending the 30th of November 2025, the Moerus Worldwide Value Fund's Class N shares returned a pretty solid 32.42% after all fees. That is the money the investors actually made. To put that in perspective, let's see how it stacked up against the benchmarks. The MSCI All Country World ex-USA Index, which is basically a measure of stocks in countries outside of the United States, returned 26.04%, and the MSCI All Country World Index, which includes both US and international stocks, returned 18.21%. So Moerus not only made money, but also outperformed both these major indexes, which they describe as value, conscious, opportunistic, and flexible, is working. They picked individual stocks that really paid off. Looking back since the fund started in May 2016, a $10,000 investment would have grown to a really impressive $26,633 by November 2025. That is a fantastic return over the years, especially when you compare it to the benchmarks. The MSCI Accession Index would have turned that same $10,000 into about $21,667. And the MSCI ACWI Index into $29,444. So Moerus has generally done well, though the MSCI ACWI did better in total growth even with a slower year in 2025. Their average annual total return for the Class N shares is a strong 10.86% since inception. For the last year it was 32.42%, and over 5 years it was a whopping 21.15%. This shows consistent strong performance. So what exactly did they invest in? Let's look at the sector weighting. A large chunk, 37%, is in financials. That is a big bet on banks, insurance companies, and other financial services. Next up is materials at 18.8%, then real estate at 14.6%, and energy at 11.8%. These are the heavy hitters in their portfolio. On the flip side, they have smaller stakes in consumer staples, consumer discretionary, industrials, and other areas. Let's check out some key stats. The fund has net assets of over $230 million. That's a good amount of money being managed. They hold 42 different investments, which is a decent but not overly concentrated portfolio. The advisory fee, which is what the fund manager gets paid, is around $1.6 million. And the portfolio turnover rate is 46%. A 46% turnover means they are buying and selling a good portion of their holdings each year, looking for new opportunities. In terms of asset types, they are heavily invested in common stocks at 94.5%. The rest, 5.5%, is in money market funds, which are generally safe, short-term investments. Geographically, Canada is their biggest play at 23%. Then comes the United States at 14.7% and the United Kingdom at 9.4%. They also have significant investments in Hong Kong, India, South Africa, Brazil, Italy, Australia, Chile, and then a category called Other Countries. This shows a truly global strategy. Now let's look at the top dogs, the top 10 holdings. Dundee Corporation Class A is their biggest individual holding at 4.7%, followed by Valterra Platinum Limited at 4.6% and Midland Holdings Limited at 3.8%. These are the companies that have the biggest impact on the fund's performance. Interestingly, there is another share class, the institutional class, with a ticker Moerus. For this class, the cost for a $10,000 investment was slightly lower at $145, or 1.25%. This often happens with institutional classes as they are designed for larger investors and typically have lower expense ratios. The institutional class actually performed even better in terms of percentage return with a 32.74% return for the year. It also outperformed its benchmarks. So for the big players, Moerus delivered even stronger results. And looking at the decade-long performance, a $100,000 investment in the institutional class by May 2016 would have grown to a massive $272,594 by November 2025. That is a phenomenal growth story for these investors. The average annual return for the institutional class since inception is 11.13%, which is slightly higher than Class N. Their 5-year average annual return is also a robust 21.44%. The rest of the sections like sector weighting, fund statistics, asset weighting and country weighting are very similar for both classes, which makes sense since they are investing in the same pool of assets. Now, let's touch on some of the more procedural aspects. The fund has adopted a code of ethics that applies to its top officers. This is pretty standard for regulated investment companies, ensuring that the people in charge act with integrity. They also reported no amendments or waivers to this code during the year, which means the ethical guidelines have remained consistent. The fund's board of trustees has identified Mr. Joseph Breslin as an audit committee financial expert. This is important because it means there is someone on the board with the financial know how to oversee the audit process and ensure the financial statements are accurate and reliable. And he is independent, which is crucial for that oversight. Let's talk about the auditors. Cohen & Company Limited is their principal accountant. For the year ending the 30th of November 2025, the audit fees were $15,850. They also incurred $3,500 in tax fees for things like preparing tax returns. These are pretty modest amounts, especially considering the size of the fund. It is good to see that the audit committee approves services on a case-by-case basis, which shows a careful approach to managing auditor relationships. The actual schedule of investments is a deep dive into every single security the fund holds. We already saw the sector and country breakdowns, but this is where you see the specific companies. For example, the fund holds common stocks in sectors like apparel and textile products, asset management, banking, chemicals, and more. Looking at the schedule of investments, we see a lot of familiar global names for the 94.5% in common stocks. We have companies like Samsonite Group, SR, ACA, ASAR, and Dundee Corporation. The banking sector includes names like Banco Bradesco SAR and Standard Chartered PLC. In metals and mining, they hold Anglo-American PLC and Valterra Platinum Limited. The statement of assets and liabilities gives us a snapshot of the fund's financial position. On the asset side, their investments are valued at over $230 million. They also have cash and receivables. On the liability side, they have payables and accrued expenses. The net assets, which is what is left after liabilities are subtracted from assets, stand at a healthy $230,441,306. This is the total value of the fund. The statement of operations shows how the fund made its money and spent it over the year. Investment income from dividends and interest was over $5.3 million. Expenses, which include advisory fees, administrative costs, and more, totaled over $2.3 million. After some fees were waived by the advisor, the net expenses were around $2.2 million. The fund generated a significant realized and unrealized gain on investments, over $52 million, leading to a net increase in net assets from operations of over $55 million for the year. The statements of changes in net assets detail the movement of money into and out of the fund. For the year ended the 30th of November 2025, there was a significant increase in net assets from operations, contributing over $55 million. They also saw a large inflow from shares sold, over $144 million, partially offset by shares redeemed. Overall, the net assets went up by over $143 million for the year. The financial highlights section provides a per-share look at the fund's performance and key ratios. For Class N shares, the total return for the year was 32.42%. The ratio of net expenses to average net assets was 1.50%, which aligns with what we saw earlier. For the institutional class, the total return was even higher at 32.74%. with a lower net expense ratio of 1.25%. The notes to the financial statements are crucial for understanding the details. They explain the fund's organization, its significant accounting policies, how it values its investments, and other important information. For instance, they use fair value measurements, and all of their investments as of the 30th of November 2025 fall into level 1 of the fair value hierarchy, meaning they are based on unadjusted quoted prices in active markets. This is a good sign for transparency and ease of valuation. The investment advisory agreement details how Moerus Capital Management LLC, the advisor, is compensated. They receive an annual fee of 0.95% of the fund's average daily net assets. The advisor also agreed to waive fees and absorb expenses to keep the total operating expenses at a certain limit, which is great for investors as it caps their costs. Finally, the report includes an opinion from their independent auditor, Cohen and Company Limited. They confirm that the financial statements present fairly the fund's financial position and results of operations. They have been the fund's auditor since 2016, which provides a history of consistency. Overall, the Moerus Worldwide Value Fund, in both its Class N and institutional share classes, has shown a very strong performance over the past year and since its inception. Their global investment strategy in sectors like financials, materials, and real estate has paid off handsomely, outperforming major market benchmarks. The costs for investors are reasonable, with institutional investors seeing even lower fees. The fund's financial statements appear robust, with clear valuations and a commitment to ethical practices. What really stands out is the fund's ability to generate significant returns, even in a complex global market. Their value-conscious approach seems to be finding opportunities that others might miss. The slight underperformance of the MSI Acqui in the most recent year compared to Moerus' own returns further highlights the fund manager's skill. However, as with any investment, it is important to remember that past performance is not a guarantee of future results. The fund's heavy weighting in financials and materials could expose it to industry specific risks. Geopolitical events and currency fluctuations, which they mention in their notes, are always factors to consider in global investing. In conclusion, Moerus Worldwide Value Fund appears to be a well-managed fund delivering strong results for its shareholders. Their transparency and commitment to keeping costs in check are commendable. It's definitely a fund worth keeping an eye on if you are looking for global equity exposure with a value-oriented approach. Alright, that is our deep dive into the Moerus Worldwide Value Fund's latest report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description to join the conversation. Thanks for watching. See you next time.